Dose for us today with Now Goodbye or Goodbye. And your buy pick is?
Shocker.
Nvidia. And so we know what the stock has done over the past year, right? We have seen a near tripling in the shares after they already had climbed a lot last year. And we are now coming into an earnings report where 85% earnings per share growth is estimated and 83% revenue growth. So let's talk about why you still like it here. You say it's the hub of this AI ecosystem.
Yeah, I believe Nvidia is trying to become the hub of the AI ecosystem, very similar to how Amazon became the hub of the e-commerce ecosystem. They're not slowing down, and they're looking to take over all aspects of that ecosystem, not just semiconductors and chips, not just data centers, but ultimately hardware and software as well.
Right, so it's that whole system that they talk about. So let's talk about the market share for Nvidia in this area right now, because most of the people we talk to say it's kind of Nvidia and everybody else.
Yes, and they dominate in the chips aspect, and they're not slowing down there. And I'll touch upon this in a minute with respect to Blackwell and Rubin. But how about their data center business? I bet we see more explosive growth in their data center business going forward as well. And data centers are so critical to AI because they're the nervous system. They power all these intensive AI calculations. But they're getting stretched now because they have to look for alternative sources of energy, which is now delving into natural gas and nuclear energy, not just electricity.
Which I know is something else you like. But that's the subject of another goodbye or goodbye. And then finally, what's next, right? Because the market is always asking that question.
And so is Nvidia. So we know next year they're going to come out with the Ultra version of their Blackwell chip that they just debuted this year. 2026, they're coming out with the new generational chip called Rubin. 2027, the Ultra version of the Rubin chip. So they're not being complacent. They're not resting on their laurels. They're continuing to power ahead, and I think they're going to continue to gain market share.
Microsoft unveiling its first products using NVIDIA's most advanced chip at its Ignite event this morning. Blackwell demand is going to be the key focus for investors when NVIDIA reports earnings tomorrow on Wednesday. Akiko Fujita joining us now to explain why investors have so much hope riding on this specific chip. Akiko.
Hi there, Shauna. Yeah, NVIDIA CEO Jensen Huang first unveiled the Blackwell chip back in March, calling it a very big GPU, and it is quite literally that. Blackwell is NVIDIA's most advanced graphic processing unit that has the ability to run 2.5 times faster than its predecessor Hopper in training AI. And that speed is critical as these AI models get larger and more powerful. Now, to understand the complexity of what NVIDIA is developing, we can look at the makeup of the most advanced Blackwell chip. It is made up of 208 billion transistors. These are tiny switches that make these chips work. Its closest competitor, AMD's MI325X, has 153 billion transistors. And that count is important because it points to just how much these GPUs can process at any given time. Now, when you combine the specs, the Blackwell chip is 5 times faster than its predecessor when it comes to inference, the process of AI models using to draw conclusions from new data. And when it comes to energy efficiency, it is 25 times more efficient than NVIDIA's previous chip, Hopper. All of this is in one Blackwell chip. But what makes this chip attractive is its ability to build out a super chip known as the GB200. It combines 2 Blackwell GPUs and 1 Grace CPU. Now, NVIDIA has designed customized server racks that allow AI companies to combine 72 of those GPUs on racks stacked on top of each other. The company has promoted that as the best way to connect the chips to get the fastest performance. It is the reason why you've got Meta, OpenAI, and Microsoft among the companies that have put in massive orders. And for some context, those 72 GPU racks combined weigh 3,000 pounds stacked on top of each other. It is taller than the average refrigerator. And you've got Jensen Huang saying there is huge potential in terms of revenue for this, guys.
All of that said, they're not without risk, of course.
Certainly.
So let's run through some of the potential pitfalls here. First of all, there's the overheating issues. And we heard once again some reports of that yesterday, that they were kind of struggling, especially with the largest arrays of chips. When they put, I think it was 72 of them together at once, they do struggle with this issue.
And it's not just an Nvidia issue. Remember, these chips run hot. The data centers run hot, so they need cooling solutions as well. That's why you see companies like Vertiv Solutions, or Modine Manufacturing, actually rising surprising in terms of their stock performance because they provide the cooling solution to the data centers that employ these chips. So I think that problem will be resolved, but continue to look for other chip makers having similar overheating issues.
Gotcha. And then the valuation, which you can't ignore after the run that they have seen.
No, I mean, they're currently trading at 64 times current earnings, 36 time forward earnings. I kind of like that forward earnings number much better. 36 seems more reasonable, but it's hard to bet against Nvidia right now. I think you could find an attractive entry point that's a little better than where we are today, but you might not get that after tomorrow, at least over the short term.
Yeah, we'll see. Although, it is hard for it to surpass expectations, right? Even though you say, you think they're going to beat, they haven't always risen even when they beat.
And will they meet the market's expectations for how much they're going to beat this time around? How much longer can they surpass these very lofty expectations? And if just one of those earnings report, they provide weaker guidance than the street is expecting, you could see a pullback, but that could also bring more investors in who are looking for that.
Like you, maybe. And you guys hold the shares, I assume.
We do.
Okay.
We do.
Certainly have been hearing that from Jensen, but we've also been hearing about some issues reported with Blackwell overheating. How quickly can Nvidia ramp up its supply given some of those issues we've heard?
Yeah, Maddie, that's certainly going to be the key question investors have going into that earnings call tomorrow. It was just yesterday the information reported new overheating issues stemming from those server racks, and that came after the company delayed the production and delivery of Blackwell by at least 3 months because of some design flaws they uncovered. Now, all of this points to just how complex these chips are. But there is significant upside potentially here for the company. Jensen Huang has said that this is a market that will start at $250 billion annually. And when you ask investors on the street, there's a difference of issues, or I guess opinions, in terms of how significantly this can ramp up. Piper Sandler's Harsh Kumar says there is potential for Nvidia to pull in $5 to $8 billion of Blackwell revenue in the January quarter. Raymond James analyst Srini Pajuri cautions the ramp up may take a little longer. He expects Nvidia to ship 100,000 Blackwell GPUs in the fourth quarter. That would be at the low end of investor expectations, but he still has a strong buy rating on the stock here. So that just points to the potential upside that investors see coming through from Blackwell. Guys, the question is just going to be how quickly they can ramp up, when those deliveries will really start to accelerate. A lot of questions going into that report tomorrow.
Certainly a lot of questions, Akiko, but you gave us a great overview of what to take a look at.
It's time now for our chart of the day. Let's send it on over to Catalyst co-host Madison Mills for a look at Nvidia ahead of its results tomorrow. Hey, Maddie.
Hey, Brad. So let's continue the Nvidia conversation. Of course, the moment we've all been waiting for throughout this earnings cycle. We're finally going to hear from Nvidia tomorrow. Now, a big question is going to be the company's revenue growth, which you just referenced in your conversation with Drew here. And take a look at the board behind me. This is the projected revenue growth offered by Nvidia that you're seeing in the green. In the gray here, this is Wall Street's estimates for Nvidia's revenue growth moving forward. And as you can see here, this is starting to trend down. So it's interesting when we talk about the question for Nvidia moving forward. Obviously, this is still to the upside, right? So they're still experiencing that growth. But the question is, will the street be able to handle that downward and de-escalation of growth, even though it is still a growthy name? Notably, in the last 5 quarters here, Nvidia has exceeded the street's expectations, so we could see this forward guidance beating. There is a question about Nvidia's total addressable market. We know that upwards of 40% of their revenue come from just 4 of those hyperscalers. So one of the big questions, can they increase the number of customers that are feeding into their balance sheet moving forward? That's going to require a broader uptick in AI usage from more than just those 4 hyperscalers, which have already poured hundreds of millions of dollars into AI. Are they going to be able to keep that pace moving forward? Another potential catalyst for Nvidia, and this is something that I'm interested to see if it comes up on the earnings call, is that total addressable market, including things like full self-driving technology, which we can expect to be fast-tracked under the incoming Trump administration, given Musk's involvement with that administration. Could that be a positive catalyst for Nvidia's forward guidance as we head into this earnings call tomorrow, guys? That's something that I'm going to be watching for.
You and a lot of people are going to be closely watching that. Maddie, great stuff. Thanks so much.
With Jensen over at NVIDIA pushing the envelope of technology and Moore's Law, moving from a 2-year cadence to a 1-year cadence, it's very hard to do this. And the supply chain doesn't necessarily move that quickly. And so there are issues that have to do with power, overheating, and that's why there's a need to move to liquid cooling and so on. But we think the ramp, while delayed, is going to happen in the first half of next year. They're in pole position. They may lose unit market share, but value market share in terms of AI, we think grows. Very good situation, but we would not be, trading ahead of the quarter. Very volatile situation.
Very volatile, Hans. So bottom line, when they report this week, what do you expect, Hans? What are you watching for?
Yeah, so we're going to look for, we think, a modest beat, a modest guide up relative to expectations. I think the street got a little ahead of themselves. We're in a transition, right? Hopper is the current generation is growing, but at a moderating pace. Blackwell really a quarter ahead, where you see the inflection. So where you're looking for, obviously, top line guidance, overall demand picture for next year, gross margins, very important to see how this ramp is going to impact margins, and the street will focus on that as well. We think everything is okay, but we'll have to wait and see. So margins, top line, and the overall health of Blackwell is something that the street is going to be focused on.